Talk about what determines whether you have a pre-existing relationship with someone or not. So if you have an email list, for example, or you have a social media following, does that qualify as a pre-existing relationship, or is it something that you've done business with? I mean, elaborate a little bit on that.
Yeah, so it's kind of foggy when it comes to that. I would say definitely black and white is somebody you've done business with in the past. So if you have a Facebook group or you have a mail list, you would have to show so much information on when the person entered the mail list. Was there any engagement outside of them just clicking on your email? Did you have lunch with them? Did you educate them? This is so much foggy area when you get to that. So me, I just went the route with people who had a pre-existing relationship with, people who invested in deals that I had already, people who may have partnered with me on deals when I was doing 50-50 joint ventures. Just a multitude of that type of avatar that I was going after, because I didn't want to, because my SEC attorney was scaring the crap out of me. Like, if you do this, you can get banned, you can do this and that. So I didn't want to really do anything like that. When I went to the RIAs, I couldn't really say I'm raising capital. I had to develop a relationship with a person, educate them on what I was doing, take them out to lunch, and just give them information, put them on my mail list, feed them information on what we're doing organically as the company is growing, just keeping them updated until they approach me and go, hey, I've been on your mail list for a year or so. I know we went out to lunch for a few times. I've been to a few of your presentations. I'm interested in doing business with you.
Yeah.
So that's a pre-existing relationship from people who got to know me from going out, from speaking engagements or whatever. They was on my mailing list. We may have lunch a few times or spoke a few times. Now they came after me and said, I want to do business with you. So that's how I organically started to build the first fund. And once that money was raised and we made the returns and paid everybody back, now fund 2 was easier because I had the cookie cutter. So it wasn't 30 grand. It was like 12 grand to set up the next fund.
Yeah.
And then I had a historical return.
Which is big. Yeah. It's so much easier to raise that capital when you already have a track record behind you and you have more relationships, more people you've worked with. And, one of the things I've learned about capital is that the elephant in the room is that when you're working with a new private lender, somebody that you're going to take capital from, they're more interested, oftentimes, my experience, to make sure that they're going to get a return on their money versus a return of their money instead of a return on their money, right? So you got to address things like, hey, what happens if things go south? I'd love to hear you talk about the presentation piece and what the conversation looks like when you're raising capital from somebody that you have an existing relationship with, or maybe someone you don't, but you've never really worked with, right? Maybe somebody that's been on your email list and you've communicated, maybe you've had lunch, but you've actually never taken $1 from them. What does a presentation look like? How do you put them at ease? And talk about that, because I think that's something that, people listening to this that don't have a desire to, start a fund, but do understand and see the importance of raising private capital. I'd love to hear you talk about how that conversation goes with a potential private lender.
Yeah, for sure. I mean, it's even if you're doing a real estate deal, right? So a fund for me was just a way for me to raise capital in one vehicle where I can execute when I want. The challenges I was having when I was doing a one-off private investor was, one guy would say, hey, I have 100,000. One guy would say I have 50,000. And back then, if I was purchasing a property, I would have to put 2 people together. And then one guy during the closing would go, well, I changed my mind. So, now you got to scramble and look for other investors. So for me to create a fund, it was easier to raise money, pool all the investments together, and pretty much execute on whatever my strategy or plan was. Right. But if you're doing a one-off deal, the communication with the investor is really similar, because they want to know, when am I getting paid? When do I get my return on my principal that I'm investing back? And how am I secured?
Yeah, no doubt. And something I want to underscore, Fuquan, that you kind of said towards the beginning of our podcast here is, you said, you were explaining your story back in, I think, 2011, 12, 13, and you said something. You said, I wanted to make my investors whole. And that's so important, that like when I work with somebody, I want to know that if it went sideways and the deal went south, that they would pick up a 9 to 5 at McDonald's just to make me whole. And I don't mean literally, but you get what I'm saying, right? Like, so you always want to make sure that your investors are protected, because at the end of the day, you need to do right by them, and it's your name and it's your reputation, it's your word on the line. So never, ever, ever burn an investor. Always do what you say you're going to do. That sounds obvious, but you'd be surprised. So as I kind of share that, I want to lead up to, as we start to wind down the show here, what are some of the biggest mistakes that either you have made or that you've seen other investors make when it comes to raising private capital and working with private lenders?
Yeah, that's a great question. I think that for me, the mistakes that I made earlier on when I first created my fund was not really having a great marketing campaign. So let me talk about that a bit. After my first fund was done, I wanted to transition over to raising capital from accredited investors, which I thought was another tough challenge because I had no accredited investors in my network, right? And I thought it would be, okay, how do I get in a room full of accredited investors? I would say the biggest mistake that I made was, you know how they have these mailing lists where you can send mail out and all this other stuff. You know, you watch all this stuff and then you have these guys reach out to you because once you open a fund, you get on the radar of different marketing companies. Hey, we got leads to sell you. We can give you leads for people who's worth $2 million, $10 million, whatever. So you think, okay, if I get these leads and I do a mail campaign, I start sending postcards and, you know, offer steak dinners and do all of that stuff. You know, that stuff can fall because these are like doctors, lawyers, judges, all these high net worth people. And if your marketing is really not on point, you know, a lot of that stuff can get you in trouble, even if you set up right. So for me, I think the biggest mistake was really trying to go that route. I didn't get into any trouble, but what happened was when I started to market to these people were like, because you had their information. And when you're sending postcards to their house, and these are people who live in mansions and everything else, and they get in a postcard and they're like, who is this guy? Like, you know what I mean? They're used to like the stock market, and I'm pushing alternative assets, trying to educate them, bombarding them with emails, sending postcards to their house. That was like not the way you want to market. Like, you know, if you're generating leads to do deals and flip houses to homeowners that are in distress, okay, I get that. But I try to use that same tactic on raising private capital, and just the backlash that I got from the people that were like high net worth people writing me letters, emailing me back, removing me from your list, calling them off. It was just crazy. I was like, wow, this is the wrong way to go. So I stopped that immediately. And what I truly learned was the real way to raise money is going, pressing the flesh, meeting people, building relationships with people. It takes time.
Yeah.
It takes a year or two to establish a relationship with somebody, let them see what you're doing, transparency, and then becoming familiar with who you are, what you do.
Right.
And then eventually they will invest with you on their time when they are ready. Right. So you can't have blast text messages, calling people. Like, that's the wrong way to go.
Yeah. And that's the kind of stuff that can really like land you in hot water. And that's what you want to avoid.
Even if you're set up right, it's still going to cost you money in legal to get out of that mess.